If you're a trade business owner who's grown a business from yourself as a one-man band to now having a team, purchasing more equipment, investing in a warehouse, taking on more and more cost burden, but you're not sure how to bundle it all together and charge it to your clients and your projects instead of having to absorb it all yourself, then sit tight, because today I'm going to be breaking down exactly how we go about helping our clients to price their jobs, cover their costs, and make the money they want to earn personally, even as they continue to grow. Pricing for profit is a huge topic, one that I'm always talking about all the time. So today I'm going to be stripping things back, keeping it super simple so you can walk away from this training knowing exactly how you need to price your jobs moving forward. For those who don't know me, my name is Troy Larkham, client advisor at Trade Business Accountants, and we help trade and construction businesses turning $1 to $10 million a year to build greater security in their business and dramatically increase their profits and cash. So let's dive in. Now, in my experience, when most business owners start out, their business model is pretty simple. And what I mean by that is they have themselves, maybe a ute or a van, they've got some tools and they get to work, they have a crack. And that simplicity, it's fine when you first start out. You're trying to get some initial sales, you're trying to build that momentum and really get more and more work through the door. But as that momentum builds and they start to grow, this simplicity starts to actually become a problem. You're taking on more people, more equipment, more overhead, more cost, but you're not really sure how to cover it all when you're pricing your jobs. And from what I've seen, this is typically where I see the disconnect between business owners and their understanding of how their pricing numbers bundle together with their business numbers. And the problem is they're using a bottom-up approach to pricing, not a top-down approach. And what I mean by that is right from the very start of their business, right in the early days, they price from a granular level, whether that's the breakdown of the cost associated with one man, one labor hour, or one material item. And they get all these, low-level, intricate details right on what it's going to take to deliver the job, which is great. But the problem is with this bottom-up approach, they end up having to answer one really, really important question right at the end. And that is, what gross profit margin do I need to achieve? And this is typically where I see most business owners shrug their shoulders because they really have no idea what the answer is. They've spent the time at that granular level. They know the numbers and what it's going to take to deliver the job. But that disconnect between, those pricing numbers at the bottom compared to those business numbers at the top is the issue. You need to know what margin you're going to achieve right from the start. And this is because your gross profit is the most important part. It's the most important part of your entire build-up of your price. And the reason for that is because one, it covers your overhead costs, the costs that are always there, eating away at your business 24/7, 3 times a day, even if you don't sell anything. And two, it's what gives you a return in operating profit, the profit left over in the business after your overhead costs and after your job costs. That is what business is all about, your operating profit and making that return at the end of the day. So if you don't have a gross profit margin target that you're trying to aim for across the board, then you're pretty much pricing blind. Yeah, you might have nailed the buildup of cost to actually deliver the job, but you have little to no clarity on what it's going to take to cover the cost of doing business and give you a return at the end of the day in operating profit. This is why you need to follow a top-down approach to pricing. And what I mean by that is you need to start with the high-level business numbers first, because only once you have that high-level 30,000-foot bird's eye view of what you're trying to achieve from the business perspective, can you then begin to break it down into the micro granular details of prices and labor rates and all those granular components that it takes to actually build up the price of the job. If you start at the bottom in the granular level, you can get lost in the detail and the complexity of the job numbers, and understanding how those pricing numbers relate to the business numbers can actually get pretty confusing. Whereas if you start from the top and get crystal clear on the business numbers first, before you even price a job, then you're going to have that clarity on the business numbers, on your gross profit margin that you'll need to make across every single job to one, cover your overhead costs, and two, make the operating profit that you want. It's that simple. Top down, not bottom up. Profit shouldn't be left to figure out at the end. It should be focused on from the beginning. Focus on the numbers you want to achieve in the business first, then look at what you'll need to price each individual job or project at to make those business goals a reality. That's what I mean by top down. Now, you're probably thinking, how do you actually calculate your gross profit margin target? Well, the first thing you need to do is set a gross profit target. Now, for those of you who aren't super clear on what gross profit is, This is the simplest way to break it down. Gross profit is the business's reward for delivering the projects and jobs that it's completed throughout the year. Now, the actual build-up of gross profit, though, is, as you can see in the second column there, operating profit and overhead costs. That means for us to actually determine what our gross profit target is, we need to figure out, one, how much we think we're going to make in overhead over the next 12 months, or the projected amount that we expect to make over the next 12 months. And two, set an operating profit target over the next 12 months, because we know based off this diagram, if we can determine what our 12-month projection is of operating profit and what our 12-month projection is of overhead cost, then we're going to have a pretty good estimation in terms of what our gross profit target should be. For example, let's say you're expecting there to be $800,000 in overheads over the next 12 months. And let's also say that you want to make $300,000 in operating profit. That means your gross profit target is 1.1 million. That's 800,000 plus 300,000. So you need to make 1.1 million in gross profit over the next 12 months to, one, cover your overheads, and two, make the operating profit that you want. All right, so now that we've got our gross profit target, the next thing we need to do is calculate your gross profit margin target. This is different to your gross profit target because this is the actual percentage of revenue that we want to be gross profit. And if we can figure this out on an annual basis, we're going to be able to break that down on a job-to-job basis, because on average, if we can achieve that same gross profit margin over and over and over again, on average, across the board, across all our projects, all our jobs, then mathematically, we should arrive at the end of the year on track with our gross profit target, which is what this is all about. Now, to figure out what your gross profit margin target is, all you need to do here is project how much revenue you're expecting to make over the next 12 months and divide your gross profit target by that projected figure. So looking back at the same example from before, let's project that the business will make 3 million in revenue over the next 12 months. That means to calculate our gross profit margin target, all we need to do is divide our $1.1 million gross profit target by our $3 million revenue projection. That comes out to be roughly 37%. That's your gross profit margin target, 37%. That's what you need to try and aim for across the board on all your jobs. So for example, if you have a project that you estimate to cost $63,000 to deliver, again, that's the labor, the materials, the subcontractors, and so on, then ideally, we want to be quoting that project at $100,000. That's a 37% gross profit margin, leaving $37,000 in gross profit. Now, of course, it's not always that simple. Chances are you're not going to be able to universally charge your gross profit margin target on every single job, because typically your margin shrinks with different size jobs and different markets and different clients. So sometimes you'll be able to charge that margin and sometimes you won't. That's why you're going to need to play a bit of a margin game here across all your different work types, across your different clients, and across the different markets that you're playing in, because this is all about trying to strike a balance to try and achieve your gross profit margin target across the board. Your aim here should be to average out at your margin target over the entire year. So for example, here we've got 37%. You might have 30% on one job, 50% on the next, 40% on another. But overall, what we're trying to do here is get that average like I'm talking about. So for example, you could also set a criteria with different jobs. So if we're looking at this from a purely a job size perspective, you could potentially, one, for any job that's under $5,000, you could try and aim for a 50% gross profit margin. Then for any jobs that are between $5,000 and $20,000, you could maybe aim for a gross profit margin between 35 and 40%. And for any jobs over 20K, well, then you could maybe aim for, a gross profit margin between 20 to 30%. Now, whether or not you can actually achieve these prices is a whole other discussion. Again, this is just an example that I'm trying to show that what you want to do is really get that average across the board to make sure you're hitting your gross profit margin target by the end of the year. And something that's going to be really, really important that you got to keep in mind here is tracking your finances at least on a monthly basis to make sure that you're proactively monitoring whether or not you're actually on track to hit your target. Because if the average is 37%, but over the last 3 months, you've averaged, a gross profit margin of 28%, well, we know we're falling behind for those 3 months. So that's why you want to be tracking this ongoing, because if you are falling behind, then that way you can actually start to rectify the problem right from the start, rather than getting to the end of the year and the end of the 12 months and realizing, shit, I haven't hit my profit margin. That's not what we want to do. We're all about being proactive here and getting on the ball early to make sure we, one, cover our overhead costs, and two, achieve the operating profit that we want as a return for taking on business ownership and taking on all that risk, all that stress. We need that reward in operating profit at the end of the year. It's really, really, really important. But again, financial tracking and all that stuff, we can save that for another training. The key takeaway I want you to take from this lesson, though, is you need to approach your pricing from the top down, not the bottom up. This will ensure you not only nail the buildup of cost to deliver the actual job, but also the buildup of what it takes to cover your overhead costs and make a profit for yourself at the end of the day. If you at least have that understanding, you'll be far better equipped moving forward to price in a way that is commercially viable for your business and make sure that your business numbers are part of your pricing numbers. Really, really important stuff. All right, so that's everything I wanted to discuss in today's session. I hope it gave you a much deeper insight in terms of how you need to be approaching pricing in your business moving forward. If you've got any questions, please drop a comment below and we'll be more than happy to answer. Also, be sure to like, follow, or subscribe for more training that we'll be releasing continuously every single week, giving you more of this content so that you can go away and start executing and getting better results in your business.